our 7th webinar of the Entrepreneur Bootcamp webinar series. We are so excited to have you here today. The topic for today will be setting up a bookkeeping system, and it will be facilitated by Perry Sandage. I will also like to introduce myself and our team. My name is Rocio, and I will be the monitor for this webinar. We also have our translator, Sarie, and our technical support person, Sacha. During this webinar, you will be able to ask questions. In order to do that, you just click on the Q&A button at the bottom of your screen. This webinar is provided under a grant from the Texas Workforce Commission, Workforce Solutions Rural Capital Area, and the Service Learning Program at Texas State University. Perry, thank you so much again for being a part of this series, and I will now hand this over to you.
Thank you, Rocio. I want to welcome everyone to setting up a bookkeeping system. And I'm going to make sure that I have control of the screen and make sure that I am not showing so everybody can concentrate on the actual slides. So my name is Perry Sandage, and I have over 25 years of experience working with bookkeeping and accounting systems. I have worked for small, medium, and large companies. My role has ranged from day-to-day bookkeeper to controller. In the last 10 years, I have worked extensively with startups. This includes a technical startup, startups that got lots of funding, and startups that didn't have any funding at all. This gives me a good understanding of how to create a bookkeeping system when you have just started a business. I also happen to be a QuickBooks Advanced Certified Pro Advisor. Today, I'm going to go over the basics of a bookkeeping system. I'm going to assume that you don't really know much about bookkeeping. You should know that bookkeeping for a business is a bit more complicated than dealing with your own personal finances. The first thing we're going to talk about are the definitions that we will need to understand in this webinar. Then we're going to talk about a very simple bookkeeping system, and then we will go into detail about an automated bookkeeping system, talk about financial statements and other components of a bookkeeping system, and finally, recommended processes and procedures. I hope by the end of this webinar, you have a good understanding of what you can do to keep track of the money in your business. Now, I know that a lot of you have a basic idea of what bookkeeping and accounting is, but I decided to visit our friend Wikipedia to get their take on it. What I found is that Wikipedia says that accounting is the measurement, processing, and communication of financial and non-financial information about a business. It measures the results of an organization's economic activities and conveys this information to users. Now, those words, conveys this information, are important because the only reason for a bookkeeping system is to gather the financial information and report it to the users. And as we see in our friend Wikipedia's definition of bookkeeping, it is the recording of financial transactions and is part of the process of accounting in business. Transactions include purchases, sales, receipts, and payments. Any process of recording financial transactions is a bookkeeping process. Bookkeeping is the process that gets the information together so that you can convey it to the users. In my experience, the reports are the most important part of bookkeeping. Everything comes down to having accurate numbers on the reports, including all the amounts that need to be included and helping make those numbers understandable to the users. Basically, bookkeeping is keeping track of all the money that comes in and all the money that goes out and being able to report it in one way or another. There are 5 elements or categories in bookkeeping. Every number that appears on a report will fall into one of these areas. The first is assets. Assets are what is owned by the company. This includes your bank account, any equipment, vehicles, if you have land and building. It includes what people owe you, which are called receivables, and any other things that are owned by the company. The next element is liabilities. These are what is owed by the company. I know those two words sound a lot alike, but there's a big difference between what is owned and what is owed. Liabilities include all of the bills that you haven't paid, any credit card or loan balances, and any other amounts that you owe to the government or others, say as sales tax or payroll tax. These are called payables. There are also many other ways to list items that you owe someone else. The next element is called equity. Equity is what belongs to the owners of the company. When you start a company, someone comes up with some kind of money and they use that to pay the first bills. That is an owner's investment. Let's say I decide to start a coffee shop and I have to come up with money to set it up. Maybe I get a loan for part of this money, and that would be a liability. But say my rich uncle gives me $10,000 and says he just wants a part of the business. That is equity. That is an owner's investment because my rich uncle wants a part of the business. He will be part owner. Another item in the equity section is when an owner takes money out of the company. Say you are the owner and you pay yourself some money. That goes in equity as a draw. The last two listed are retained earnings, which is an accounting term, and net income. Retained earnings is the company's income or losses from prior years. Say you start your business in 2018 and you have a loss in 2018 and a loss in 2019, but you're now making some money. The losses from those prior years have been moved into retained earnings. The income or loss from this year shows up as net income in the equity section. The fourth element is income. This is the money that you receive for the sales of your products or services. This is the money that you make in your business. This has nothing to do with the people giving you money as a loan or people giving you money to buy part of the business. This is the whole reason most people have a business. I've also included in this section something called cost of goods. These are expenses that are directly related to a sale, and they are subtracted from your sales. So you are a manufacturing company and you sell widgets. It takes some items to make the widgets. The cost of those items is called cost of goods. Another example is an electrician who needs to purchase wire, conduit, and a breaker box to work on a specific project. The cost of those items would be subtracted from the income from that project and would be classified as cost of goods sold. The last element is expenses. These are the costs of doing business that are not related to a sale. They can include such things as overhead expenses, office expenses, advertising, marketing, insurance expenses, and legal and professional fees. They can also include things like payroll and taxes that are not included in your payables. There are other items that may or may not show up in this section of the reports. This includes such things as depreciation and amortization, but these categories are usually not used by new startups. They can, though, appear on reports that are created by CPAs or tax preparers. Now that we all have an understanding of the meaning of all these words, let's talk about how to put together a simple bookkeeping system. Bookkeeping systems don't really need much. It is best if you have a separate bank account that is used exclusively for your business transactions. Then you can use either an Excel spreadsheet or any spreadsheet to pull together the information and process and manage it in a way that makes it easier to create reports of that information. A separate bank account for your business is important because it becomes tedious to try and separate out personal expenses and personal income when processing your information. It is understandable that you would use your personal account when you first start the business, especially before you get things established or until you get some money pulled together to open an account. But it is a good idea to move to a separate account as soon as possible. It becomes difficult to do taxes at the end of the year if you will have to spend a lot of time walking through your account to try and figure out what you spent on the business and what you spent on your personal expenses. The process of a simple bookkeeping system is to make sure that you run all of your business transactions through one account. Then on a regular basis, and I recommend that you do it at a minimum of once a quarter, you go into your online banking and download all of the transactions that went through that account for that period and put them into your spreadsheet. It can be Google's Sheets, it can be an Excel spreadsheet. If you're a Mac user, you can use Sheets. Anyway, anywhere that you have the transaction lines separated out. Then what you're going to do is add a column at the beginning of the sheet and put a code in that column for each transaction line, indicating what kind of transaction it is. This is called categorization. Say you have some income and you only have one type of income because you just started. So you're going to put an S in that column at the beginning of those lines. Your deposits might include owner's investments, so they may be coded differently. For expenses, you would put an O for office expenses, a P for owner's pay and personal expenses, and many other combinations. You have 23 letters of the alphabet you can use in combination with numbers to create your categories. If your codes get complicated, it is always a good idea to put the list in the spreadsheet somewhere so it is easy for you to understand and remember your system. After you've categorized all your transactions, then you can sort everything by that category, by the categories. This will give you a list that groups your transactions. You can then run a total for each category. Once you have all those totals for each category, you basically have what you need for any report. You will, of course, also want to have a bottom line total for all of the transactions, which will show you if you made any income for that period or if you made a loss. The nice thing about this at this point, if you are somewhat versed in using spreadsheets, is that you can create totals for the month or totals for the quarter or totals for the year. And you can funnel all of this into a single spreadsheet to create reports. Some people I know have gotten sophisticated and created the reports in Excel by getting the totals from other worksheets. At that point, I would generally go on to use an online system. If it is going to get complicated, I don't want to spend the time creating an Excel spreadsheet. I'm going to use the system that is already automated. If you're not comfortable using an automated system, it is quite easy to use a system for managing your bookkeeping. I've recommended this to several people and they have used it. Their CPAs have been able to use that information to create their tax return. And you don't necessarily have to create any reports off of it, just to have the categories and the information categorized is all that a CPA or tax preparer needs to do your tax return. Now that we've talked about a simple spreadsheet, let's discover we've discovered that they can get quite complicated, especially if you start having a lot of transactions. Let's talk about an automated system. There are many software companies out there that provide apps for your bookkeeping system. You can have very sophisticated software all the way down to very basic that looks like a checkbook register. You can have it online, on your phone, on your computer. All of these listed companies have some kind of system that fits into one of those categories. Xero, QuickBooks, Peachtree, FreshBooks, and Sage all provide software of one sort or another. These are the more well-known ones. There are others that are not so well-known that can manage larger business accounts and bookkeeping systems and can become very sophisticated and may need a major computer to be used. But I'm going to talk about setting up a simple system, so I will give you the basics of how these systems work. We've talked about the components of bookkeeping. Now let's talk about the components of an automated bookkeeping system. The two main components of an automated system are the chart of accounts and the bank account connections. The foundation of any bookkeeping system is the chart of accounts, and this is those list of categories that we just talked about. This is made up of the accounting categories that are labeled in such a way that they fit into one of those 5 elements that I discussed earlier. These labels, based on the elements, are used to determine where to put each transaction on the reports. Here's an example of a basic chart of accounts. It shows that your cash or your bank account is an asset that belongs on the balance sheet, that your liabilities, such as your credit card, also belong on the balance sheet. As you can see, your sales belong on the profit and loss statement and are called an income. And it shows that office expenses is an expense that belongs on the profit and loss statement. Once you've created your chart of accounts and built it in a way that works for your business, you should be able to use it without changes, except for an occasional minor change. The other major component of an automated bookkeeping system is the bank account connections. As far as I know, all automated software, bookkeeping software, allow you to connect directly to your bank and download the transactions from the bank to the bookkeeping system. This helps eliminate all of the data entry that is usually associated with keeping books. It means that you don't have to enter each receipt or each line into a spreadsheet or into any other system. This is similar to what I've told you to do to download those transactions into a spreadsheet. Once the bank transactions have been loaded into your automated system, then you can, of course, categorize them, just as I explained in the simple system. You will do the same kind of categorization as you did in the simple system, but this time it will be easier since you will already have the chart of accounts set up and all you have to do is pick from a list. Most of the software have sophisticated systems that will categorize each transaction for you. They will allow you to make changes to those categories if you don't agree with their choice. They are, of course, basing their guess on millions of transactions that have gone through their system. And they will also base their guess on how you've categorized things in the past. So the more you categorize things in their system, the better they will get at guessing at the correct categories. Some systems, such as Xero, will put the transactions directly into a register and categorize it for you, while others will put your transactions in one place until they are categorized and then move them to the register. The register is used for all of the reporting. No matter which system you use, you will be able to go in and change the categories in one way or another. Now that we have the transactions in the system and we have categorized them, and they all are in the register in a way that we feel is correct, let's move on to the financial statements. Financial statements are just a fancy word for reports. When a bank or your CPA asks you for financial statements, they are looking for a balance sheet and a profit and loss statement. Another useful report in all automated systems is the transaction list. The balance sheet is a snapshot of your assets, your liabilities, and equity at a single moment in time. This shows the user the balance in business accounts on a specific day. It shows what the company owes and owns, and as we discussed before, net income, which is the total from your profit and loss statement. So if the bank asks you for financial statements for 2019, they will want to see a balance sheet dated December 31st, 2019. The profit and loss statement is a look at the company income and expenses over a period of time. So to follow my previous example, the bank wants to see 2019 financial statements, then they will want a profit and loss statement that shows all of the income and expense transactions from January 1st, 2019 through December 31st, 2019. The bottom line of this report, of course, is the net income. This is how much money the company has made or lost over the period of the report. The other report that I mentioned is the transaction list. This report can be run for any period of time. It is extremely useful to help find errors. Because of the customization capabilities of most automated bookkeeping systems, this report can be used to find specific transactions for specific days. For example, you know that you paid a large insurance bill in May, but it is not showing up on your profit and loss statement and does not appear on the list of payments to your insurance company. You can use the transaction list to create a report showing all the transactions for May sorted by amount. This will put the large amounts together and you can find the transactions for the insurance company. This makes it easy for to find specific transactions and easy to fix them. You can also use this report to determine how much you've spent with specific vendors or on specific items. Again, the customization that is available will allow you to go through and pick out only those transactions that fit your filters and allows you to get any kind of information that you want out of the automated bookkeeping system. There are other handy reports in all automated bookkeeping systems. They are all used to help the bookkeeper and the business owner understand how money is coming and going from the company. The accounts receivable aging report is especially important. This is a list of those who owe the company money and how long they have owed it to the company. So it will show you if customer X owes you $20 from 3 months ago or $4,000 from a year ago. This report is broken down by 30, 60, and 90 days, so it is very easy to see your oldest receivables. And it is usually used for collections so that you can get some of that money as income. Similarly, the accounts payable aging report is a list of the people you owe money to and how long you have owed it to them. This is helpful when the company has cash flow issues and needs to pay only a portion of the bills. It is a place to see the total for the payables and gives you the ability to figure out which bills you're going to pay with what cash you have. The general ledger and the trial balance are usually requested by the CPA or a tax preparer to help with preparing the tax returns. The general ledger is a list of every single transaction and how it affects every single account over a period of time. This is very handy for a tax preparer because they can see what happened in the accounts without having to access your automated bookkeeping system. The trial balance shows the totals for all of the accounts for a specific time broken out as debits and credits. This is also handy for the tax preparer to be able to use to check that the right numbers are on your tax return in the right place. There are many other reports in automated bookkeeping systems. Some systems have extensive report lists, while others are not quite so extensive, but all of them will have at least the basic reports I've mentioned here. Now that we've discussed the reports, let's talk about some other components of an automated bookkeeping system. So one of the advantages of using an automated bookkeeping system is the ability to create invoices easily. A lot of startup companies use Word or Excel or some other spreadsheet to create their invoices. This works well if you don't have too many invoices or if you don't sell too many products or services. But if you are trying to do invoices this way on a regular basis with a lot of customers, it becomes tedious. One of the big issues of this process is that it requires the additional step of entering the invoice transactions into your bookkeeping system in some way. With an automated bookkeeping system, you can do invoices straight out of the system. This puts the transactions directly into the system. With the more sophisticated automated bookkeeping systems, there are places to enter your products and services, your logo, and the customer information. They also have the ability to calculate sales tax, with some even calculating sales tax based on the shipping address. This makes it much easier to keep track of who you owe sales tax to. Another feature of some automated bookkeeping systems is the ability to enter recurring transactions. This allows a company, such as a leasing company that has a lot of customers who owe them rent, to have the system automatically create invoices on a regular basis. It makes it much easier to see who has paid rent, who has not paid rent, if all of the rent invoices automatically appear each month. Another component of automated bookkeeping system is the ability to automatically receive payments from customers. Some systems connect to merchant services systems so that the customer can pay by credit card directly from the invoice. The payment is automatically entered into your bookkeeping system and applied to the invoice that has paid. Even without the credit card processing system, being able to apply to open invoices in an automated bookkeeping system keeps the records accurate. So now payments have been received, and somehow it has to be deposited into the bank. Automated bookkeeping systems make it easy to apply in payments to an invoice and then create deposits for the bank. By using the automated system, there is a minimum of data entry that has to be done. And if the deposit has been created in the automated system, it will match perfectly when the transaction is received from the bank. Some automated systems allow for entry of bookkeeping of bills. For small businesses that receive bills from the vendors and don't necessarily have the money to pay them right away, the ability to keep track of what is owed and to whom is very important. This is also a system that allows for greater accuracy and less data entry. Some automated systems also allow for recurring transactions where a bill that happens on a regular basis is entered into the system automatically. These recurring transactions help the bookkeeper keep track of bills that may not have a paper copy or an email sent each time. A good example of this, again, is rent. The landlord doesn't usually send out a bill each month for the rent, but it is still due. Having a recurring transaction enter the rent due each month means that the person paying the bills will see that it is due. And of course, if the system allows for bill entry, then it will also allow for bill payment. By giving the bookkeeper a list of outstanding bills to choose from, they can pay only those that are due at that time and create and print checks directly from the automated system. There are also systems that allow you to automatically send payments to vendor through an add-on service. Of course, there is usually an additional expense on top of the software expense, but the bookkeeping system providers work hard to automate ways of doing most every bookkeeping task. Most of the bank transactions received from the bank are created as expenses. This is distinct from checks and deposits. It allows for things like debit card transactions, bank fees, and adjustments. Those systems with this ability to add automatic transactions also allow entry of recurring expenses. This can come in handy for those automated credit card or debit card transactions that we have all become so familiar with. It again makes it easier for the bookkeeping to keep the bookkeeping records accurate without doing a lot of data entry. So you have a checking account, and like most people these days, you actually write checks. One of the advantages of using an automated bookkeeping system is that a lot of these systems provide the opportunity to print checks directly from the system. It does require that you purchase special check forms, but it's quite easy to use. This makes it extremely easy to pay bills, write payroll checks, and to write any other check that may be needed. By using the automated bookkeeping system to print the checks, you have eliminated the data entry that is required by writing manual checks. It also eliminates the possibility of entry errors. I know that in QuickBooks, it is very easy to enter some bills, decide which ones to pay, click a couple of buttons, put the checks in the printer, and print everything out real nice and neat. It also helps the bank because things are more easily read by their automated check reading systems. And it helps keep everything up to date on a regular basis. The final components that I want to discuss are the sales tax and payroll systems. Sales tax can be very complicated if the company has sales over various municipalities in various states. Each municipality and state has their own rules and regulations about collecting and reporting sales tax. Following the rules for each of these municipalities and keeping track of the numbers can become onerous. But most of the sophisticated automated bookkeeping systems have some kind of automated sales tax system. They will do everything from calculating the tax based on the shipping address all the way to creating the sales tax return for each municipality and creating the bill for each municipality, giving you the opportunity to print and send the check when it is appropriate. And they will keep track of the due date for each of these municipalities so you can pay those bills on time. Payroll is also a very complicated system. There are a lot of rules, not just from the IRS, but also from each state. Because there are various returns and required tax deposits from various entities, it can become quite complicated. There are also various requirements for what needs to be deducted from paychecks and how often and from who. And of course, these requirements change on a regular basis. It isn't it's regular that the IRS changes the federal income tax requirements every year. And if these things aren't done correctly, businesses can face stiff penalties and can even be forced out of business. Because of the complexity of doing payroll, most automated bookkeeping systems have a payroll component which helps calculate all of the deductions that need to come out of the paycheck. They will also help create any tax returns and help estimate the tax deposits and when they are due. Some of them even allow for direct deposit of the employee's paycheck into their account, which of course makes everything a whole lot easier when trying to do payroll. Now that we've talked about the different components of an automated bookkeeping system, let's talk about processes and procedures. One of the most important things that a bookkeeping system is to make sure that it is as accurate as possible. When presenting financial statements to a bank or to the company owners, or especially to the IRS via tax return, it is extremely important that everything on the report is true and accurate. Because of this, accountants have, over the years, come up with many ways to double check and verify the numbers. One of the most important ways is to reconcile the balance sheet accounts to external sources. If you have a checking account, you already know that you normally get a monthly or quarterly bank statement. This bank statement can be used to verify the numbers in the automated bookkeeping system against the bank system. This is called reconciling the account, and every automated bookkeeping system I have ever worked on has a way to reconcile. It is important to reconcile as many of the balance sheet accounts as possible. This includes credit cards, loans, and any other account that has an external source for a balance. It is even possible and important to reconcile the sales and cash receipts from retail establishments on a regular basis. If there is a cash drawer, a reconciliation can be done against the daily sales to make sure that everything balances and cash has not disappeared. Reconciliations are one of the most important tools a bookkeeper can use to make sure that the bookkeeping system is accurate. Invoicing invoice processing is also important. The steps that are followed in the invoice process can eliminate the possibility of duplicate entries made to the system. The standard accounting practice is to create an invoice and then to receive a payment against that invoice and then to deposit that payment into a bank account. If this process is followed for every invoice, it means that there will be a matching deposit on the bank transactions. This eliminates the possibility of bank transactions being categorized as sales when there is an open invoice for that deposit. This practice can lead to a duplication of sales and can lead to a balance in an undeposited funds account. This has led some companies to call people like me to figure out what happened. Just as there is a process to follow for invoicing, there is also a process to follow when entering and paying bills. The standard accounting practice in this case is to enter the bill and then pay it with a bill pay feature, even if the bill is paid automatically from the account. If bills are entered but not paid through the automatic bookkeeping system, there can be duplication of expenses if the bank transactions are just categorized to an expense account and not as a bill payment. This leads to the accounts payable account showing a lot more money owed than what is really owed. And again, people like me get called in to try and figure out what happened. The final procedures are those that are done on a regular, monthly, or yearly basis. It is a good idea to make sure that the accounts are reconciled on a monthly basis, and it is always a good idea to run monthly financial statements. This way, the bookkeeper and owners can see where the business is economically. This also allows the opportunity to see if there are things that look unusual. Say this month there is an expense for $800 in gas, even though there hasn't been much travel. This is going to pop out as something unusual and allows for research and corrections. Another example of this is if you see that the accounts payable are very high, but the expenses look normal. This, of course, would indicate that some bills had been categorized, that some bills hadn't been paid through the automated system. Again, sales would show up that way too. If you start seeing a large balance in undeposited funds, then you notice that there's something to be researched and fixed. On a yearly basis, it is important to do the same thing, but for the yearly financial statements. It is especially important if it hasn't been done on a monthly basis. The most important thing to do at the end of the year is to make sure that everything has been entered and is correct. Then to prepare the documents or the files that are needed by the tax preparer. It is also a good idea, if your system has this ability, to close the books for the year after the information has been presented to the tax preparer. This locks the transactions so they can't be changed. All systems that have this capability do have a password, so someone can go in and change things if they know the password. But once the tax returns have been prepared, it is best to leave the prior year items alone. This allows for the records to match the tax return. If the company is audited, it is important to be able to present the records that match what is on the return. Well, it looks like we've come to the end of my talk. and I hope I have provided you with enough information so that you are able to put into place a bookkeeping system, one that allows you to create accurate records that can be used to give you and any other people interested in the status of your business finances a good look at those things that are going on in your business. As I said in the beginning, reporting is the most important thing about bookkeeping, and you can do things in a way that create accurate records. And as you become more familiar with your bookkeeping system, things will become much more easy to do. I've included a couple of resources for you. One is a link to a survey showing the available online bookkeeping systems. This will lead to a link for each of their websites. The second resource is a link to finding a QuickBooks Pro advisor. These are bookkeepers and accountants who have a good understanding of accounting, bookkeeping, and QuickBooks. They're available to help set up QuickBooks and to answer questions you might have.
Okay, so now we are going to go ahead and do a few Q&A questions that our participants have asked. So one of the first questions is, thank you so much for your presentation. How do you suggest that I maintain receipts? Do I keep hard copies or should I scan them into a file? If into a file, how do you suggest I do that?
It is totally up to you if you want to keep receipts. You'll want to get with your tax preparer to see how long you need to keep those receipts and what receipt you actually need to keep. Since we have automated so much, receipts are not necessarily, hard copies are not necessarily what we need to keep anymore. There are a lot of softwares out there that do nothing but scan the receipts and hold them. I know that QuickBooks has its own receipt scanning system, so you can scan in a receipt and actually attach it to the transaction that comes through the bank for that receipt. So there are a lot of different ways. If you are going to use a system to scan a receipt, my suggestion is you keep it in a specific folder on your computer and back that up to an external hard drive of some sort. And then, of course, keep them for however many tax returns that you keep.
Okay, thank you for that answer. Another question asked is, some online businesses offer invoicing services. Are these something that I could consider?
Really, the online invoicing services really depends on how many invoices and how much invoicing you have to do. If you're a smaller business and you don't have very many invoices, it's not necessary to go out to another service, especially if you start using an automated system. Even if you're using Excel or Word, you can create a process where you just copy and paste everything, and it becomes quite easy. The external services come into play for companies that have an enormous amount of invoicing to be done every day. And that, hopefully your business gets so big that you have to use that.
Mm-hmm. Okay. Another question is, how often does the IRS request information regarding bookkeeping records?
The IRS will not request bookkeeping records from you unless they are auditing you. They have no interest in your basic regular bookkeeping. They do require tax returns, and they're going to assume that you're keeping the records for those tax returns. If they have a question about your tax returns, then they're going to come to you and say, I want the records from that. But that's basically the only time they do that is if they're auditing you.
Okay. Another question is, do you have to set up all new accounts with each year since we need to put a password on accounts to change?
No, the only thing the password and the closing the accounts does is it locks the prior year transactions. All of the accounts and categories are just still stay there and are still open. It just says that anything before this date can't be touched unless you have the password. So you just keep working just like you always have. You just have you can't do anything from last week or last month or last year.
Okay, another question is, are there any other resources that you can suggest to help in the future regarding setting up bookkeeping?
The only ones I can think of are YouTube videos. I mean, there are a lot of YouTube videos out there. And then you can always find a local bookkeeper or a CPA. Most CPA firms have a bookkeeper on staff, and any of those people can answer questions. I know that QuickBooks has some pro advisors that can be used, that can be asked questions of, and I'm sure that the other systems also have some people in the same capacity.
Okay, another question is, are there tax preparers that are for specific types of businesses, for example, manufacturing versus diners?
Oh yes, every tax preparer has their own set of businesses that they know better than others. And that's something that you're going to want to do when you try to choose, when you go out to choose a tax preparer. You're going to want to interview them to see if they've done returns like you need done. You know, some tax preparers only do personal 1040s and don't do anything for business. Other tax preparers specialize just in, say, manufacturing, or they specialize in nonprofits. You know, if you're a nonprofit, you don't want to use the tax preparer who's never done a nonprofit tax return, because they're very different tax returns.
Okay, and another question is, what about Mac bookkeeping tools?
So the Mac, I know that QuickBooks is available for Macs as and also, of course, you can do QuickBooks Online using a Mac. And as I said, any spreadsheet will work, so that you have the Mac spreadsheets. And I'm sure there are the other bookkeeping software out there have their own way of helping with the Mac users.
Okay, another question is bookkeeping for online versus brick and mortar businesses the same?
There are differences, but it's basically the same. You have the same income and expenses. You just have to, you may have to enter extra categories, such as if you have an online system, you're going to have more costs of things like internet and website and that kind of thing, whereas the brick and mortar, you wouldn't necessarily have that. But they all fall in the same basic income, expenses, asset, liability, equity sections. You just may call them something different or have other accounts.
Okay. And I think we have a Spanish question, so I will leave that up to Saria.
Thank you. Okay, so the question in Spanish is, ¿hay algunos recursos de contabilidad que se enfoquen en los emprendedores hispanohablantes? So that would be, are there any bookkeeping resources that may focus on Spanish-speaking entrepreneurs?
The only ones I know of, I do know that there are tax preparers that that exclusively work with Spanish speakers, and they may have resources. I also know that QuickBooks has Spanish-speaking agents and so that anyone working on QuickBooks has people that they can talk to there if they have questions. But I don't know about the other online services.
Thank you. Okay. Nos dice que en cualquier oficina o cualquier trabajador de contabilidad que hay específicos siempre que hablan español y le pueden ayudar con sus servicios en español y también le pueden recomendar otros recursos que pueda utilizar. Y aparte, el software de QuickBooks tiene agentes que hablan español y también le pueden ayudar.
Okay, thank you for that translation, Sadia, and thank you, Perry, for answering those questions. I want to thank everyone for attending our webinar. Thank you to Perry, Sadia, and Sachet for helping put this webinar together. We will see you all at the next webinar, which will be on August 4th, and it will be talking about basic fundraising vocabulary. The Zoom link for that webinar will be on our WordPress website, where you will also have access to the other previous webinar recordings and the activities that come with it. And we will also send out an Outlook invitation for the next webinar. In regards to the QR code that is on the screen, please scan it with your phone or click on the link to take the post survey if you want credit for it. If you cannot complete the survey now, we will have access to it via the WordPress website. And if you want to go ahead and move on to the next slide, and you want to talk a little bit about Splash Co-working, Perry?
Yeah, so I am also a co-owner of Splash Co-working, which is in downtown San Marcos, Texas. We are a co-working space that's open from 8 to 6 on Monday through Friday. And we provide high-speed internet, printing services, and a lot of other services that you can find out about if you go to our website at splashcoworking.com. And I want to also say that I really appreciate being given the opportunity to present this information today. And I hope everyone's come away with a better understanding of how to do bookkeeping.
No, yeah, thank you so much for being a part of this webinar. I'm pretty sure it's going to help a lot of people who don't know how to do this. And we appreciate your time and collaboration with this. So thank you so much.
Thank you.
So that will conclude the webinar for today. I hope to see you in the next webinar, and I hope you all have a nice day. Bye.
All right, I stopped the